Hey everyone, welcome to High School Dropouts Advice. If you need subtitles, please click on the CC button. So today we are talking about Microvision, which trades under MVIS. The company is an American company developing laser scanning technology for projections, 3D sensing and image captures. The company has been around since 1993. The stock has shot up insanely, is trading for a 2.2 billion market cap, as you can see here. Let me show you what Microvision is about. Then we will compare this company with few other options to see if you should buy it or not. Microsense is building tiny projectors, as you see here, which will be projected in an HD resolution. The projections are also interactive, which can be used at info centers or build customer relationships. Because the projections are more engaging with the consumer and customers, I think this would be really good in targeting kids. I think that you have heard of the LiDAR sensor technology, which is used by car manufacturers for their autonomous driving capability. This kind of sensor can also be used for home security and also can be used in glasses to project images in your glass, as you can see in this little video clip of their company. Maybe you remember scenes from Minority Report with Tom Cruise, where his glasses was able to display further images. This is the same technology. Lastly, they of course offer their system for the car industry. The LiDAR sensor will act as the eye of the car, if you wonder what the LiDAR sensor is. The company actually owns a lot of intellectual property and has many patents. Now let us dig deeper and talk about the financials. We see that the company has around 21 million in assets, an increase compared to last year, 11.8 million. Let's look at their cash flow, and we can see that they have raised cash by selling their common stocks, which generated them 24.4 million. We also see that they have a net loss of 13.3 million. Let's have a look at the revenues. We see that the product revenue decreased from 8.8 million to 3 million. Then they have cut research and development costs from 18.6 million to 9.8 million. Overall, they managed to lose less in 2020 than in 2019. But we can agree that the momentum and development got lost here, which is not good for a growth company. Let me show you this number again. They had a total loss of 16 million this year, and we have 21 million on hand. It doesn't sound like the company is going to last very long. So I dig deeper to see what they are doing. Let's see what they write about their financials. We have focused our attention on strategic alternatives, including a potential sale or merger of the company, sale part of the company, strategic minority investments, as well as licensing and other transactions. This is not very encouraging news. Since 2010, there has been substantial doubt about our ability to continue as growing concerns. In late 2020 and early 2021, we have been able to raise net proceeds of 12.7 million through the issuance of 2.1 million shares of our common stocks and 48.7 million through the issuance of 2.5 million shares of our common stocks. So in the end, they could raise 61.4 million. So this will give them more room to breathe. I was interested in looking into this company's culture, and I have to say it wasn't so positive. If you read the reviews, we have many complaining about the management. The product and visions are good, but the management wasn't on track. We also see that two board members are leaving the company, Yalon Farhi and David Vescore. The news mentioned that they are retiring, but it can also be related to other issues. Let us compare it with some other LiDAR technology companies before making up our mind about Microvision and the MVIS stock. There are bigger options out there like Valeo, which trades under VLEEY, a company from France with over 114,700 employees and yearly revenue of nearly 20 billion in 2019. Then we have Waymo, which was the well-known self-driving Google car. Then we had Velodyne LiDAR, founded in 1983 and generating 101 million revenue in 2019. Please have a look at the evaluation, 2.2 billion. You might remember the evaluation of Microvision, which is also at 2.2 billion. Now let us compare the financials to see which company has the better numbers. We see that Velodyne LiDAR got over 2.4 million in cash and a total asset of around 432 million. Their liabilities have increased from 59 million to 91 million, which is okay when you compare it to the cash they raised in relation to the increased debts. Let us have a look at the financial highlights. Total revenue of 95.4 million compared to 101.4 million. Net loss of 111.5 million, which included 91.3 million of stock-based compensation. Non-GAAP net loss was 20.1 million. Overall, we can say that Velodyne is losing less money than Microvision when you compare their revenue. Both are trading at the same market cap of 2.2 billion. Velodyne LiDAR is trading at around 20 times its price to sales ratio. Microvision, on the other hand, is trading at around 711 times its price to sales ratio. I'm not saying that Velodyne is a buy, but it has more fundamentals to back up the market cap. Let me show you one more company which is also working on LiDAR technology. Hexagon AB with 20,000 employees. The headquarters is in Sweden and has a revenue of 3.64 billion. Let us have a quick look at the graph. We see that it picked up after the pandemic and made over 120% in gains. The working culture within the company seems very good. 75% would recommend their friends to work here and 90% are approving the CEO. Those are very good ratings. Let's have a quick look, and we see that the company also has positive earnings to show. 624 million euro, which is around $735 million in profit for Hexagon. By doing our comparison, we can find better companies with better fundamentals that create the same technology. The LiDAR technology is a very crowded place to be in, with many big players. I honestly don't think Microvision deserves a 2.2 billion market cap evaluation and a 711 times price to sales ratio. But we are in 2021. There are many new investors in the market, creating a lot of movements for the market. Anyway, for legal reasons, I have to say I'm not a financial advisor or CPA, so remember, your money is your responsibility. I'm just a guy on YouTube. Please do your own due diligence and hire a CPA and financial advisor. Don't forget to share, like, and subscribe. Many thanks. See you hopefully in the next video. Thank you. Bye.